Bam. Shout out to everybody here on the live. Let's break it down. Bitcoin getting a crazy pump to the upside here. 84,787. Did I buy the bottom when I bought that whole BTC? I just may have. I really just may have, man. I've done it many times. It won't be the first time I bought a whole Bitcoin at the exact pretty good spot, you know, within, I don't know, $1,200 to $800. We'll take a look here. Fed rate coming in here on Wednesday. And let's take a look. The final CPI numbers for Europe, too, which was lower than expected, which is good, right? Federal funds rate at 4.5. We knew with the forecast, we knew the previous, and we are ready to go. We'll get you there to Jer Powell in about 13 minutes. He's going to start talking. I'm going to rearrange the screens a little bit. We're going to trade the smaller time frames. We're going to have a blast. Let's kind of take a look at what just happened here for Bitcoin. All right. On my BITUNIX account here, they just sniped me for $62. No. Well, look, I was in this trade here, thinking they would make this, and they sniped all the liquidity and then went right back to the upside. Pretty grimy move. Did it twice, actually. Went up, down, up again. That's a whipsaw. You'd think there would be a diamond in there somewhere. That is a diamond. And so a diamond would basically do this, right? Something like that, you know. Anyway, not the best diamond, but I'll break to the upside for BTC. Let's take a look at what's happening to Bitcoin right now on the bigger time frames. Let me get rid of this spaghetti for a second and take a look at the 1 hour time frame. Shout out to everybody here on the live. Thank you for jumping on in. I appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. Welcome to the FOMC Fed meeting. We're just getting started. Shout out to everyone that subscribed to the channel. 93,145 subscribers, on our way to 100,000 subscribers. If you can believe it, I can't. Unbelievable. Shout out to you awesome people. Thank you for jumping on in. Appreciate each and every one of you for being here. Let me pop out the chat, see what's happening. Shout out to Shano. Shout out to my whole team. And shout out to the staff for coming back into the studio for an extra stream. We appreciate you guys. We love you. And I know I work everybody. I am the hardest working boss in the game. But hey, we all benefit from the hard work. The company continues to grow. And we will make moves that most companies take 5 years, 10 years. We'll do it in 2 to 3. Exponentially winning, baby. All right. Let me get the link to the Fed meeting there. I'm going to send it to the Discord. And we are live yet again. I don't know how I do it, honestly. But I do. And tonight we have weekly screen share. So you're going to get me for like, I don't know. That's a lot of Sam Price today. Live from love from London. Shout out to my man, Uric White. Thank you. Is your trade blurry? Is just my service? Yeah, you're blurry, man. Yeah. Yeah, that's your service. 84,500 for Bitcoin. But again, I've been watching the 1 hour, the way it's interacting with the 21-day moving average. And I just want to see it make a flag here. This is all I've been saying. Honestly, if the smaller time frame wickage, you know, if you weren't trading the smaller time frame, you're just watching the 1 hour like me, it's all still going to plan. Waiting for this 21 to touch and for price action to pump out of a flag. Bit of a cup and handle there, too, for BTC. Because you got a bit of a cup there, Cooper Cup. Boom, right? And that could blast us. That has a measured move all the way up to like 87,000. But can we get to 86 first? That's the question. And nice pump all the way off 76,000. Bitcoin already up $8,000. The volatility has been amazing. Yeah. Screen share is Wednesday this week instead of Thursday. Yes, 100%. Yes, exactly. Screen share is, yeah. If you say the chart is blurry one more time, you will be removed from the live stream. Yep. I'm not going to have it. I'm just not going to have it anymore. Okay? Thank you. Thank you so much. All right? Appreciate it. Like, I'm staring at my own stream. Look, if I stream while I'm streaming, that means I got more bandwidth going than you. So look, I'm streaming myself, and that is crispy. I don't see any blurriness in the chart. That's actually really crispy. I look clean. Dang, look at that. Look at that part in my hair. Perfect part. Perfect part. My hair's a little messed up from the headphones. Look at that. Clear eyes. The blue on the blue. Ready to rock, man. You never seen a tiger ready to rock like that. Texas people, what's up? Yeah. If it was blurry, everyone would say it unless you somehow believe you're the only person here with eyes. Amen. Amen. So Bitcoin struggling at this key level. We're going to see some heavy volatility. It's going to come in. That's what we do here on the channel. So let's go to BTC, USDT, Binance. I'm going to go to the 1 minute Chartamundo. Delete everything. And we're going to be watching price action as it unfolds in real time. I'll tell you right now, we got a couple things brewing right now that just began. We got a diamond for Bitcoin. You know, like, let's say right there, right? That's the diamond right there. I mean, you whipsawed, diamonds break to the upside. You got a bit of a cup and handle here. You break above the 200 MA on this 1 minute time frame. We're gonna probably, looks like we could get a pump here to the upside. Do I trade Fed? Look at this. So we could delete this, right? Oh, these are those altcoins. Remember I got Solana and Ton going? Or look, it's even. I'm down 7, up 7. Nothing happened. It's a nothing burger over here. It's a nothing burger. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here as we get ready for Jer Powell. I can't wait to see Kobe Smith and all the awesome people ask him all the awesome questions that they do every single time. It's going to be blast. We're going to have a good time. 7 minutes to countdown on that Fed meeting. And we're just getting ready to show you how I may possibly scalp this. Technically, this looks like it could go either way. 50-50 shot here. So I'm not going to jump in just yet. But can we get back above that 200 MA on that 1 minute time frame? If I were just to take a look at this, if we stay above the 2 minute there, we get a move. And I mean, that sends me all the way to about $86,350 for BTC. So I like what I'm seeing here for Bitcoin. And it's starting to kind of begin in the way I'm looking for. But again, it's got to hold. Right? We'll see. This could go either way. But there's a possible scalp. Maybe. Maybe, maybe not. Let's take a look at BOOKMAP, see what's happening to BOOKMAP. We'll get that up and running for you too as well. And we are waiting for the Fed to come on in here. And I got it ready to go. Jer Powell will be live right here on this screen. Ready to rock. I will be moving myself smaller into this section of the screen here. One more time. Right there, like so. I will be live trading Bitcoin. If I see the potential to live trade it, I'll be showing you the 1 second chart, which I make smaller on this side of the screen. You know the drill. So while Jerome Powell talks, I'll have the 1 second chart up right here, and I'll be seeing if there's opportunity. Looks like we may be getting a breakout of this little flag here to the upside for Bitcoin. A little bit of like a falling wedge flag here that wants to party. Looks like it may want to party. So yeah, this trade may play out here. Let me take a look. I may take an FOMC gamble here. 86,349. My stop loss would be at about 83,996. And we set up the trade in case we want to take it. Maybe 200 for $1,000 for BTC. Interesting time. So there's a possible that's a possible projection right now that I may be taking. And on the left side of the screen, we're also gonna have BOOKMAP for you to show you the liquidation, show you what's happening, and show you what's going on. All right. Yeah. I'm so blessed to be part of the best trading group in the world. Sammy Cup-and-Handy is the best trader out there. God bless you. Thank you for the love, man. That 40x short whale is now a 40x long whale. Flip the script. Yep. He's now long on that move. Amen. I'm just going to be a little more exciting than your average guy. I'm going to get you going, get you moving, get you flowing. Get that energy up at its apogee. Let's go. Let's get that energy going, baby. Let's go. FOMC. 4 minutes to count down to the FOMC. We got the action here on BOOKMAP. We got liquidity riding. Look at all the stop losses we're about to go and shred. Looks like Bitcoin may pump to 87,000 in the next day or two. It's a possibility. Look at all that liquidity that they want to go gobble up. Again, I would not want to be on the wrong side of that. I would not want to be on the wrong side of that. I'll teach you how to trade the right way so you don't get rocked and wrecked. And somehow, some way you make it through. All right. Look, there it is. There's the flag right there. About to pump a low stochastic. I'm in there. 200 for $1,200. That's a beautiful buy right there. I'll take it. I'll take it. Oh, wow, man. Yeah, we just keep gripping. I'll risk 213 for high risk. Let me see. I just want to be in the mix today. I want to, this is a cup and that's a handle. There's a money printer kind of beginning to build here. And as that music comes down, Jerome Powell comes in. He's going to come in when the music comes. We're going to drop that music. He's going to walk on in. Jer Powell, baby. Jer Powell. Shout out to everybody here on the live. No chart today with a promise of 2 cuts later. Nothing burger again. Yeah, but we got to hear what he's saying. This is a crime. This man only has 90,000 subscribers. Best alpha in the game. Shh. We don't. If we too big, they'll probably try to take me out. So it's good that I'm not that big yet. All right. We don't want to be too big. Hey, calm it down, Bobby O. Bobby O low. Bobby O over here. Wait. What did I just do? The risk is too high. 166. It's got to be $20. Yeah, the risk is too high there. Hold on. We're going to close that. That was too quick of a move. Hold on. Yeah, I wanted to see that get back above. Sketchy times. Can't be too big, she said. Oh, I don't know what that means. Swell got something happening. Interesting. No one expected anything, but his commentary is important. Exactly. We all knew there was going to be no rate hike, my man. We all knew that. It was a nothing bag. It was a nothing bag. FOMC. FOMC. Are you here? Are you here for me? FOMC, baby. So here we are. Bitcoin losing the Tutor domain, not getting that love. Made me want to kind of say no way just there. And sign up to Bitcoin Las Vegas. I'm telling you, it's going to be a blast. I'm going to shrink that down just for now. But Bitcoin Las Vegas is going to be a blast. Not going to that is going to, you're going to, I know you don't want to live with, you want to learn to live without regrets. But I mean, man, if I didn't go to that, I'd probably be pretty upset. All right. FOMC meeting live. Here he comes. He's walking out as we lower the music. Yes. Yes, we live for this. Oh my God, I can feel the energy.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments.
Just slowing the pace, so they're
Economic
back to
activity
QE.
continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. And projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise
I'm taking that long.
below 2% over the next 2 years.
I'm taking that long as it cracks the 200 of May, everybody.
In the labor market,
you do
conditions
you.
remain solid.
This thing is pumping hard.
Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal.
Never get there.
Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the
I always have pants
food
on.
and energy categories, core PCE prices
Matching
rose
pants.
2.8%.
Don't blame me.
Inflation expectations have recently moved up.
Bitcoin
We see
pumping
this in
out the
both
long.
market and survey-based measures, and survey respondents,
The long's
both
up
consumers
5%,
and
I'm told
businesses,
you.
are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain
the king of
consistent with our
3%. I
2%
told you.
inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Flatten
At
those.
today's meeting, the committee
Shorts up there
decided
at
to maintain
86,000,
the target
85.8.
range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy.
Oh, you see the double mask chick
While
in
there have
there?
been recent developments in some of these areas, especially
She double
trade
masked.
policy, uncertainty around the changes
What a
and
loser,
their
man.
effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater.
We don't care if it's a 6-second delay. Get a life. Just come here and watch the video. Like, who cares? You know what I mean?
In our SEP,
Making no sense. You people don't make any
participants
sense.
wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely
Like, you don't make any
scenario
logical
going
sense when
forward.
you say, did you think about what you
An
said when you
admittedly
said it?
challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to
money that
suggest
they
the
don't have.
quantity of reserves remains
They don't have a
abundant,
balance. Where do
we
they
have
get
seen
$2 trillion?
some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer.
Oh, good.
The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard.
Howard Schneider with Reuters. Thanks for your time. So
You got first.
sort of the real
He's usually
side,
way in deep.
Inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that
have to cut rates.
Much change, I think
says they're going to have to cut rates.
Partly because you see.
We're trying to figure out if he has to cut rates sooner than later.
Kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you, Colby Smith with the
Colby.
New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully.
I'll bring them down a little bit. They got high static on them.
Every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think broadly is this: you do see increases widely in short-term inflation expectations, and people who fill out
Can we put in a double bottom at 84,200?
Questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example,
well anchored. He's liking that word today.
It's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys. But if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty
hard
solid
hard data. You say data, I say data.
Growth looks like
it is what it is.
Maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%.
You say tomato data, I say tomato data.
Most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs. And there may
I'm probably not funny, but I think I'm funny.
A delay in further progress over the
That's all that matters, right?
So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs
the economy
of weakness.
stinks. I'm going to go buy an Escalade.
But given where we are, we think our policy's in a good place.
I'm long on Bitcoin right now.
To react to what comes and
see what happens.
That the right thing to do is to wait here for greater clarity about what the economy's doing.
Trading this flag here, see? Double bottom, higher lows.
Nick Timmeros, The Wall Street Journal.
Nick.
Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially.
He likes the chubby tie, but he never goes all the way up.
Into the decisions of households and firms.
Gotta get that space cleaned up there, Nick.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth?
What happened to his mic?
Buy in advance, psychology, big changes in inventories.
They got some serious issues today on their mics, guys. It's not me.
In the short run, expect higher inflation.
So
his mic just went down.
I like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress.
You got two masks on, bro. It's crazy.
It doesn't really show
it's so crazy.
Downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos.
Yeah, got to get it cleaned up. Yeah.
By 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So, again, people wrote down 2 cuts the last time.
I'm the king of 3%. We're breaking out of the flag to the upside above the 200 MA. That means a double bottom.
In growth.
See how this is a W here?
1 to 1.7 in 2025. A tick up in the unemployment rate, so not much there. But core inflation up by 0.3. And so those two kind of balance each other out. So people, not everybody, but on balance.
Show us the W for the win.
Numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, you know, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Yeah, definitely avoid them. 100%, Andrew Miller.
Mr. Chairman, Edward Lawrence,
Spot
with Fox
on.
Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing...
They got to clean that up right there. They all got that space.
2023, 2024 levels. So what's going on there?
Yeah, so
Make sure I'm cleaned up right now.
that's a feature of, has been for some time a feature of this
Gotta
labor
get
market.
tight in
You
there.
have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting, you know, relatively high productivity. We've got unemployment, you know, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And, you know, the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, you know, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for, you know, for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and, you know, we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
You know, only in a kind of an early way. I mean, it's only been a few months, right? You know, for example, the layoffs that are happening here are, you know, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. And I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with, you know, people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers just, you know, they just kind of
nice pump for Bitcoin. I'm going to stay long here.
Things happen very indirectly.
I'm still long, baby. Show me the money.
To try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig.
Basically, he didn't answer the question.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are
This is a new guy. I haven't seen this guy
Transitory
before.
is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
The entry is now.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because you
pandemic.
could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, you know, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, you know, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as It's a different situation. There are differences and similarities. I mean, it's a different time. You know, we haven't had real price stability fully reestablished yet, and we have to keep that in mind. And you know, we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So
he does look like he stole the teacher's glasses. That's funny.
Steve.
It's true.
Steve Leisman, CNBC. Thanks for taking my question.
Steve, he's going to go hard. He always goes hard.
The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
You know, so we have two goals, right? We have maximum employment and price stability, and we have to balance those. And you know, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging you know, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal, and then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment, because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
You know, there's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, there could be within 12 months a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, you know, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Chris.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I
huge pump for Bitcoin. We just took a massive gain to the upside. I nailed it. If you took along with me, we are in gains, baby, gains, baby, gains. Sammy did it again with the call to the upside, 85,600 pumping.
As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University
and
of
they
Michigan
called him
survey.
Sammy Gaines.
In the summer of 2022,
look at that huge pump to the upside. I got in there.
Long-term inflation expectations
like swimwear
index as the reason that you went big with a 3/4 point
boom.
Hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so
I bought that 84K Bitcoin, baby, the whole Bitcoin.
What we saw last week from the
I'm now up $1,000.
You just carry the same weight as it did in the past?
My alerts too loud on the ears, man.
In no way did I place a huge weight on it. I think that was
probably the look, the bot entered a long, so the bot thinks it's time to get long.
So this is that mission.
Crazy. Usually it exits a long, but the bot decided to get long.
We don't dismiss data that we don't.
It saw something.
We force ourselves to look at it, but it is an outlier compared to market-based and compared to others.
Look at that pump, man. We gave you the call right here on the show. Another live stream call by the Price man. Sammy Price does it again. Bangs on him with the entry. Ba-boom. Stop loss could be moved to break even at this point. We can cover the trade. We can't lose the trade now. We are ready to rock for more gains. Back to Jerome Powell. So sorry. It's about the money, though.
There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn.
BTC ripping.
Reassure people that
I made the call.
You can spot a problem early enough unless you decide to be preemptive.
Beautiful move.
Look, we're aware of we're well aware of how things are going to evolve and the time frames and all that.
That thing mooning.
We will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty. And we're watching that carefully, and we think it's a good time for us to wait for further clarity before.
I made 260 on that Bitcoin trade, dude. 38%.
It's going to be hard to get
just take that
in a government by tweet.
Just made $260 like that. Look at that.
At some point, you actually will have
bang on top of what I already made today.
Yes, I think we will.
282 ripping.
It's hard to say when that will be.
How to make $300 in 2 seconds by Sam Price.
These decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year.
I moved the stop loss up
adapting as we go.
all the way to 85.2 to cover. We're live trading right now, just so you know. Like, I don't think you realize.
Hi, Rachel Siegel from the Washington Post.
We are live trading
Thank you for taking our questions.
Rachel.
At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months? If there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain, and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise.
I'm working, but I'm also a dad.
It's not really telling you anything. You're trying to extract a signal
trading
from that,
FOMC.
and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say
rocking in $300 in profit.
Was
or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case.
Max C, baby, Max C, the best place to be.
And I do think that the first 2 months
I made 300, 1, 2, 3, 4, 5, 6, 7 minutes, $300, 7 minutes.
Inflation after a string.
Only in a trader's life.
Average close to zero.
I made $2,000 today.
It's coming during tariffs, but it's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see.
Did the daily break the 200 MA? That's what we're going to see now.
Say with confidence how much of that came from inflation and how much of it, from
I'm still riding this trade.
Didn't, but that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be
still riding the stop loss. Look,
to make that assessment, and I'm sure we will make a lot of progress on that, and we already have. But it's going to get me. A challenge.
They're going to get me, but I'm going to take my 300.
In your mind, would make something cross from noise to a signal? What that threshold would look like?
I'm going to put my stop right there if they can wick.
I mean,
they got me. I took 300 though, everybody.
That particular pieces of inflation are clearly not caused by tariffs. For example, if something was, in the service sector that was far away from anything that's
a beautiful scalp.
You might think, okay, well that is.
I'll shut up now.
Housing services inflation. Which, by the way, has
I just wanted to show you I can live trade FOMC. I can do it. I can do it.
Kind of our problem now. It
looks like it's going to keep mooning too.
Slow, but it's definitely.
I think it's gone.
Moving down. It's more now with goods and to some extent with non-housing services inflation.
Kelly.
About to go to 86K. The daily's above the 200 MA.
CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3. And
people don't make any sense to me.
The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify.
Guido.
You were talking about how tariffs were a good part of the uptick in the inflation.
She said Guido.
Forecast.
They wrote Guido.
I was just wondering what that specifically
Pretty
refers
sure
to.
it's
Is
Guido.
that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming?
Looks like this might pump. This little flag might pump.
And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah. So in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways.
He's so dovish right now. They're loving
it. To write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is.
So what's the point then?
Balance sheet. So yeah, I think, I guess the way I'd say it is, it was the flows in and out of the.
That's the next scalp right there we're looking at.
I was thinking about it, but as we thought about it, we really came to the view that this was a good time to make the move that we made, and. Broadly committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT. And
what are we doing again over here? What the heck day was it over here?
And the sense of that is,
what was I running the country's money supply?
Then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. You know, it's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant.
He's a plane coming in for a landing.
See some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful, rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were.
I took the scalp. I'm going to risk 100 of the 300 I just made for some more.
Level yet, but we're going to be
see if I can get some more.
Slowly. It's a common sense kind of
entries here. Stop losses at 85, 87. Targets 87, 183, and we're pumping.
Claire Jones.
Everything is green. Look at this. I just opened up a $100,000 trade on Bitcoin.
Inflation
101.16 Bitcoin trade.
Well anchored.
10 grand at 10x leverage.
Say they remain
I'm green across the board, baby. Just made $200 in a second. 228. Let's go.
Not so well anchored. Why hasn't there been a more radical
made
shift
500 during the Fed meeting
today?
It's only been 40 minutes.
So when we talk about
$500 an hour,
being
that's what big time lawyers make.
We're talking about longer run inflation expectations.
I make more than they do.
And they really haven't moved much. I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey.
The daily broke the 200 MA. Remember, the daily broke the 200 MA.
Well anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what speed. There's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are
the flag is ripping.
We're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or
flag is looking
surveys.
healthy.
But we'll watch it. I mean, we're not,
I am live trading with you right now, giving you the sauce.
Term or medium term.
On the 1 minute chart, showing you how to get paid during the stream. No one else does this. They all just do this, but they don't get you paid. I get you paid, baby. Let's go.
Treasury Secretary Bessent has observed
put the money in the bag.
Growth over the last
put the money
years.
in the bag.
Been in what he calls government or government adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying
Look,
private?
I'm already at $400 on this trade I just opened in a second ago.
Growth as something that has policy implications.
This thing is ripping.
So that has been the case. We talked about that over the course of the last year.
To make $1,000 in front of you like that in less than an hour.
Months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policy.
Man's got a green thumb, straight up. Master friend.
The elected government has a different role, and they can have those.
Can I do a quick QT question? Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet.
I'm a flash close at 394.
We really strongly desire that.
I just took another 378 off the table.
We haven't made any decisions about that. We will.
Should have sold. Here we go. I'm out.
We'd look carefully at letting that.
That's how you make $400 in under 5 minutes, folks.
The balance sheet
using $10,000. Okay.
Constant at some point.
I'll get you there one day. You're gonna get there. I'm going to get you there. One day at a time.
Simon Rabinovich with The Economist.
Doesn't happen overnight.
Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales.
There's no idea what you're talking about.
Surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19.
People are lost in the sauce.
The downside. So my
5 minutes away from the 21. May get a pullback here.
Positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that
from Canada?
We're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we
some
can
bearish div there. See,
a restrictive stance of policy.
I clipped that,
and that's what I mean.
I took a G off the table here, folks.
Positioned.
During the Fed meeting.
Forecasting right now, it's
basically 800
is always
on top
very,
of
very
it.
hard, and
great day of trading.
In the current situation, I just think it's
I love Wednesdays, baby.
Remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed the line that previously said the committee judges
it's a real news station
achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Why is his lips like that, man?
Either of those things.
I got need some lip chat
sometimes
stuff.
With language.
That's gross, bro. What's up with your lips, bro? Jeez, sorry.
For life, and then we.
It's kind of weird.
Take it off, and that was the case there. There's really not meant to be any signal here. Over the past
this bearish divvy there.
Conveying the sense
I think
of
I'm going to close my other short, my other clip there.
They be in balance or close to being in balance. That was useful as we approached liftoff, if you remember. But we're past that. I'm sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP. If you look. Participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since.
See his lips, like what is up with that?
Met.
So gross.
Concerned at all about some of the market volatility having a real economic
makes me want to wipe my lips. Like, what's up with your lips, bro?
Spending or consumer spending.
Why are they all cracked like that?
Income households.
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things.
We don't care about the surveys.
We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking
big
the back
spike in
of
price
inflation?
right now. Look at this pump here. I'm still in the scalp on the USDT pair. I scalped the USD pair to get out for 400.
Higher levels to pretty close to 2%, while the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
I love
Hi,
those.
Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning,
speaks elegantly,
kind of a
say nicely,
placeholder.
say
The staff has a
sweetly.
placeholder of
kind of like a girl, but
a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens? It will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Last question,
Hi,
yes.
Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made.
She's so funny.
The minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to.
Nah, she's cool. There's just something cool about her. I don't know what it is.
At the
I
moment,
feel like we could
after
hang. Like, you know what I mean?
the
Like, I want to
debt
have
ceiling
coffee with her
resolved.
and
Is that the
chill. She
case?
just seems, I don't know, something about her.
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move.
Look, shoulder, head, right shoulder, that could take a dump here
lengthens it
to the
doubles it
downside.
effectively by slowing by half. That people thought that's.
I'm down
that's a good
$4
place to
on
be.
the USDT scalp. I may just cut it off. Oh, I'll back up
help
10
us
on the
assure
pump
that
there.
This path is a smooth one. as
we may get a move
closer and
now.
closer to that.
Look at
So
that.
That's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we
Those
came around to
TGA
this.
flows.
And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than it. It does address that issue.
Chasing Amy
but it
Lee.
really
You're
is
so funny,
also-
man.
It fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why pretty strong support. I just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit.
Shout out to Master Friend. Love you, brother.
More and more confident.
You're my brother forever, man.
You can take our time getting there. We're shrinking the balance sheet every month, and we think it was.
I want to take this to 87K, baby.
Thanks very much.
All right. He was in and out, and we got a nice pump. I'm happy I came. I'm happy I traded the session. I got some gains. I made about $600 and during that little, how long was that? An hour? So we just made money again here on the channel with the lifer. That beautiful candle, we nailed it. How did we nail it? Let's just go over it again one time for the people that are just coming in. I'm good at trading flags. The second I see a downward trajectory and an upward trajectory, I made this flag. I saw the measured move, And bang, I got in. We got the spike. We sold the top. We then made another quick scalp, which we sold another move on. And now here we are at 85,500. Some big things have just happened for Bitcoin. Actually, it's time for a pretty good update right now because something big just occurred. Now, that's a shoulder, head, and right shoulder. That looks like that's going to dump. Shoulder, head, right shoulder, and to the downside, right? Like that's going to take you down. I think I may cut off my that other one there. Yeah, it's down $40. I'll cut it off. Beautiful. I still have the other two trades open on those altcoins. Altcoins look like they may be getting some love now. I'm going to keep those open. That's Solana and Ton. I got two very small leverage trades open. I don't tend to trade too hard on leverage. So we could see this is a shoulder, a head, a right shoulder, likely to dump to the downside. There's a gap in the VRVP. 84.5 looks like the very well area we could head back to. So I took the money quick and I took the money fast. And that's what you got to do to make the gains in this market. So we take a look here at Binance. And I'm going to run on into the daily. Now, the daily was just above the 200 MA. I mean, well above it, too. So a huge move as the daily gets above the 200 MA for BTC. And that's the main reason I got pretty excited here. Let's see, on the trade I just made there, I got in at 85.5, sold at 85.795. It was a $300 move for Bitcoin, which made me $300. I had about a little more than Bitcoin in there. I had 1.123 Bitcoin. I used $10,000 in at 10x leverage, but it was like $10,150 or something. So that extra 10 added more to the tippity top. Bitcoin getting above the daily 200 MA tells me that I can open up a long now. This daily closes as such. I open up a long on the daily with a stop below one of these wicks, and I just go from there to see if I can get all the way back up to about 95,000. That's my next big trade, and it's very simple. I trade the big time frames when we get above the 200. I open the trade, I let it sit, I go from there. And that's really it. I just think the smaller time frames are going to give me a better entry, so I'm waiting on this before I get in. I got in when we first broke out. Smartly, I took the money because you guys saw me make the gains, and I figured like it was a smart thing to do, so I took the gains off the table. All right. Same here. Took the money and got paid. Who put a 333 if you made gains with me today during FOMC? Put a 333 if you made gains trading FOMC. I don't know what more I can do, guys. I gave you a call last night. We woke up into gains. I did a live stream all day. I'm going to do a screen share tonight to go over all the ups and downs and the altcoins we're looking at. I got you, baby. I got you. I'm going to take a break now. I've been working since 7 in the morning. I'll play with my kids, build some Legos or something, give my eyes a screen share break. But man, this is hot. I like what we're seeing, and I'm going to be on it for you throughout the day. Put a 333 if you made gains. Look at all these people that made gains with me on the live stream. You're a genius, Sammy. No. You're a genius for finding me. Shout out to everybody here on the live. Thank you for jumping on in. We love you. We appreciate you, and we care about you. I'll be in the trading group throughout the day. I'll never leave you hanging. Stay blessed. Stay amazing. Let me put myself back where I go, and I'm always a little bigger, too, on screen. Man, I'm so blessed to be here with each and every one of you. Thank you so much for this time. Thank you for letting me come back and show you how to make more gains. Thank you to dear Lord for giving me the gains and having the smartness to pay myself in and out, in and out, in and out. Just use $10,000 to make $300 in under 5 minutes. I mean, come on now. I love each and every one of you. Thank you so much for being here. I'll catch you tomorrow on another beautiful, amazing live stream. Remember, you can, you will, you are the best. And that secret to success, you know what it is. It's getting started.